Hello everyone, I'm John with JP Strategic Investments, and today I'm going to walk you through why I'm buying CrowdStrike stock and why I think the stock could possibly double over the next 1 to 2 years. CrowdStrike is a stock I've been watching over the past several months or so, and I've been doing a lot of research around the valuation and the potential opportunity. I'll go over why I like the stock, why I think it could grow, and where I could potentially buy more if the stock does drop. If you enjoy videos like this, be sure to like and subscribe, and with that said, let's dive right in. So for any of you that don't know what CrowdStrike actually does, they're essentially a cybersecurity company. Now the reason I like CrowdStrike in particular is that there are a few aspects of their business that set them apart from their competition and that are setting them up for huge success in the future. The most important thing that sets them apart is their level of innovation and ease of use compared to other platforms. If you're at all familiar with cybersecurity, you've probably heard of companies like McAfee, Symantec, or Cisco. And while these companies, along with a few others, have dominated the cybersecurity space for years, they're having trouble adapting to the rapidly changing cybersecurity landscape, and CrowdStrike is poised to take full advantage of this lack of efficiency and innovation. Since all of you watching this video are investors, and many of you have probably used multiple investing platforms, let me give you an analogy I think you'll be able to understand very easily. Imagine that all of these older cybersecurity companies are like the older brokerages, like Schwab, TD Ameritrade, and E-Trade. Their platforms work, but they're outdated, clunky, and they're filled with unnecessary information. Now compare that to Robinhood's simple, easy-to-use interface, except imagine that Robinhood actually cares about their customers, and you can call them 24/7 with any help you need. That's CrowdStrike. CrowdStrike's sensor is cloud-based and it can be installed in minutes with no need for system reboots or other time-consuming installation steps, which CrowdStrike has found is a major concern for larger companies, as a full system shutdown could waste valuable time and money. Because CrowdStrike's solution is completely cloud-based, neither the initial installation nor subsequent updates or improvements require any system shutdowns or reboots. Their security strategy is also different from these other companies. They don't just focus on detecting and blocking viruses with known signatures. Instead, they've taken a more behavioral approach. Here's an example. Let's say you open a PDF from your email. Most cybersecurity software will scan that file before you download it and tell you whether or not the file looks suspicious. There are two problems with this. One, it can make the download process take a lot longer, especially for larger files. And two, this doesn't really tell you much details about the actual threat. CrowdStrike Sensor, on the other hand, does not scan files. Instead, it will allow you to quickly and easily download any files. But the difference is that once the PDF starts trying to do things on your computer that PDF should not be doing, CrowdStrike Sensor stops it immediately. And it can also give you a detailed report of what exactly happened and what you can do about it. The next thing about CrowdStrike's sensor that sets them apart from their competition is it's easily customizable. For those of you that don't know already, CrowdStrike operates on a subscription pricing model. Customers can choose exactly which parts of CrowdStrike sensor they need, and they pay for them on a monthly basis. Not only that, but each part of the sensor is customizable specifically to the customer's needs. Subscription pricing models have a big advantage over other pricing models because they have a much lower barrier to entry. This is because there aren't large upfront costs that customers have to pay. They also allow customers to try out the product without spending too much time or money. This means that customers are much more likely to try out the product, and it also means that over time, CrowdStrike can upsell existing customers with more products for a fraction of the marketing costs they would normally spend on acquiring new customers. Another benefit to the subscription pricing model is that companies with a subscription model tend to be valued at a higher multiple and have more stable stock prices. This is because a subscription model makes it easier for management and investors to forecast future revenues and in turn takes a lot of the risk and uncertainty out of owning the stock. So now that I've gone over why I like the company's products and services, let's take a quick look at the financials so you can understand how I actually value the stock. So as of their last quarter's earnings report, CrowdStrike currently has an annual recurring revenue, or ARR, of $907 million. This number is basically just adding up all of the money that they will make in the next year from the subscriptions that they currently have. And by the way, this annual revenue is currently growing at a rate of about 87% year over year. What's even more impressive though is that they have a subscription gross margin of 77%. This means that 77% of this annual revenue is profit. And because CrowdStrike business is highly scalable, they are able to add large amounts of subscriptions without the need to increase employment or other operating expenses. This means that as CrowdStrike continues to grow, more and more of that annual revenue will drop down to the bottom line and go straight to net income. And speaking of net income, after about a $200 million operating expense, CrowdStrike reported a loss of $24.5 million in the last quarter. So yes, CrowdStrike is not yet profitable. But that being said, if we remove the stock-based compensation for employees, CrowdStrike actually reported a net income in the last quarter of $18.9 million. And I wouldn't be surprised if CrowdStrike reported a positive net income in the coming earnings report even after stock-based compensation. So with that in mind, let's get into why I think the stock could double in the next 1 to 2 years. The cybersecurity market has gone into overdrive, and most projections don't see that growth slowing anytime soon. Furthermore, the endpoint security market that CrowdStrike specializes in is set to double by 2024. CrowdStrike currently has about 11% of this market share right now, but they've been adding market share at a quick pace over the past few years. Using this information, I can easily see CrowdStrike's annual recurring revenue reaching $2.5 billion in the next 2 years, which I estimate would put their annual net income around $1.3 billion. This means that if CrowdStrike were to trade at a PE of around 80 to 100, which I think is perfectly reasonable, that would put their stock price between $450 and $560 per share. Even at the low end of those estimates, the stock would double over the course of 2 years, and at the high end, the stock would be up almost 250%. Now, one thing you do have to be aware of if you're looking into buying CrowdStrike right now is that earnings are coming up in a couple of weeks. Obviously, stocks can make very big moves up or down after earnings, so this is something you have to keep in mind. Currently, I only have about 4% of my portfolio in the stock, and I'd like to maybe get that up to about 8%, but I don't want to go all in before earnings. What I'll probably do is just buy some cheap call options right before earnings, that way I don't miss out on any large moves if the stock goes up, and I can add to my position without losing too much money if the stock drops. I hope you found this analysis helpful, and if you did, please consider liking and subscribing. Other than that, see you next time, and have a great day.